I lost $8,000 in my first few months of live trading. But then I discovered something that changed everything. In the past 6 months using prop firms, I've stopped constantly losing money, and that's with only risking a couple of $100 of my own money. Look, everyone says you need at least $10,000 to start trading seriously. And honestly, I believe that too. I thought the only real way to trade was with your own capital. Well, that's what all the gurus were saying. But here's what they don't tell you. Prop firms aren't just trying to make you lose. They're actually training wheels and the smartest way to scale, even for the experienced traders. And I'm going to prove it to you with some actual results. Let me show you some average Joe traders making consistent money, because getting payouts is not just for the gurus. 6 months ago, I was that trader grinding with my own $5,000 account. One bad week, and I'd lose 20% of my capital. The stress was eating me alive. I'd second guess every trade, close trades early, and sometimes even freeze completely. How could I ever make money like this? And I started to wonder if I should just give up. But then I had this realization. What if the risk everyone talks about with prop firms is actually less risky than what I was doing? And here's the math that changed my perspective. We are going to have a quick look at a $2,000 investment. What's our potential when using prop firms versus a live account? The assumption is we need $4,000 per month in withdrawals. Now, obviously this differs for everyone. To keep it as close to 1-to-1, we'll use straight to funded accounts to compare. These are accounts that don't have an evaluation period, but at a much higher price. There's a whole different strategy with normal accounts, but that's for another day. Generally, a 50K account offers a drawdown of $2,000, but here's the thing, and let's be clear. The account size is actually only the amount of drawdown you are buying. Think of a 50K, 100K, or 150K as just the name of the product. Each one just has its own drawdown limit and profit target. 50K accounts, in inverted commas, are around $500. So with our $2,000, we can get 4. That's 4 times the drawdown of our live account and 4 tries to reach our payout. Now, for the 4K payout, there's 2 catches to this. We need to hit the profit target of $3,000, and most props limit withdrawals to $2K over a 10-day trading period. If we reach our $3K profit target and withdraw our $2K, we eat into our drawdown. $53,000 minus $2,000 is $51,000. Now, we only have $1K drawdown, and that's not good. So, to reach our 4K withdrawal, we would ideally need to get 2 accounts to $54,000. Disclaimer. Yes, it is possible to get 2 payouts from a single account in a month, but highly unlikely. With our live account, we'd need to get the account to 6K to get our 4K withdrawal. That's a 300% gain, and we only have one chance with limited room to scale in the future. Of course, there are benefits to live accounts, especially not having any rules, but for me, the opportunities prop firms offer far outweigh them. The key here is scaling. These rules apply per account, not per trader. With 2 funded accounts, our 4K target is in reach. Oh, and it gets better! Most firms allow up to 5 accounts at one time. Now, we are at 10K a month. Then, to really take it to the next level, we add additional firms and copy trade. We can actually make trading props into a profitable business. I'll be releasing a breakdown video soon. Now, I'm not going to lie to you. Prop firms have rules and they can be frustrating. I failed my first few challenges because I was still trading like I did on a live account. But that forced discipline actually made me a better trader. If you're considering this path, here are the 3 things I wish someone had told me. Number 1, treat the challenge like it's your own money. The rules aren't there to just trip you up. They're also there to make you profitable with solid risk management. Most traders think risk management is boring, but this one rule took me from blowing accounts to having a fighting chance in just the first month of testing it. And here's the crazy part. I was only right 40% of the time. I've been showing up to the markets daily for months and blowing accounts by making the same mistake over and over. I focused on being right instead of managing risk. Everyone says you need some crazy 70% win rate to be profitable, but actually you can make serious money being wrong most of the time. The secret isn't in your entries, it's in your exits. I'll break down the 2-1-0 rule that changed everything. This isn't just theory. I've spoken to a ton of traders who swear by it, including my coach. Here's how it works. Step 1. Never risk more than $200 of your 50K account on any single trade. If you have 2K drawdown, your maximum risk is $200 per trade. That gives you 10 losses. Micros are your best friends here. But here's where most people mess up. They think this trade will either win or lose. Wrong. The 2-1-0 rule states $200 risk. At 1-to-1, go break even for 0 risk. Most traders would leave that $200 risk way too long. Always mitigate risk. Doing this on every trade might just be your turning point. The hardest part isn't taking the break even, it's the psychology. Sticking to it even when you see price going to your target afterwards. Stick to your rules. The market will humble you when you least expect it. Start using the 2-1-0 rule on your next account, commit to giving it a chance, and here's my question for you. What's your risk mitigation strategy? Drop it in the comments below.